day, everyone. I think there was a ride at Disneyland, Mr. Toad's Wild Ride. Anyone ever been on Mr. Toad? Well, if you haven't, you had it last night. Everyone doing okay? So we wanted volatility. It's not exactly happening where we want it. The yen is becoming one of the more volatile currencies if you want to trade. That's, similar range. It's identical. It's tracking S&Ps. It's almost identical, isn't it? So, now that vol has picked up in S&Ps, I'm wondering if Ziggy is here. Are you here, bro? Yeah, that's what I want to know, Prabhash. I just want to know if Ziggy took the turnaround Tuesday trade from 32.45 short. You do it? When you said you were jonesing for a trade. That should have been a decent fix. Okay. So what do we have now? Here's gold. I took losses. I actually sold on the initial and put through in a money stop and got picked off on gold. Still live in silver, although I was down, 30 cents. Trade small in this environment. So I sold all the things yesterday afternoon that I, thought could fade. Only, in this business now, you can't even be an hour early. Okay, you can't even be an hour early. So crude worked, and I was short early too. We're around 64 with a 65.80 stop. Just luck that I survived it. So what to do now? How about I don't know. The euro is getting pretty. We're getting into the zone where it's got to dig its heels in. I think between here and 111. I don't think I'd want to be long euro under 111. In fact, I am from last night too. Thought the dollar would come off and euro didn't do much. All it did was go to here. I'm out under 1080. So what do you do in a market? Is this going to just be, hope that the U.S. isn't going to retaliate and the Iranians are done? I doubt it. But interesting that within maybe a 24-hour period, we could go from breaking down on the S&Ps from a descending triangle to possibly trying the breakout into the NFP. So, perhaps the NFP is going to be calm and mild and compared to what we have happening geo-wise. We haven't traded in a war footing climate like this in a very long time. And, I don't think we've ever really been at war and started exchanging artillery, ballistic missiles with Iran ever. Even going back to 79 in the hostage crisis, there was one rescue mission attempted that failed by President Carter. A bunch of choppers went down in a dust storm, and that was the end of his presidency, trying to rescue the hostages. So this is a new environment for even me, and I thought I've seen everything. Oh yeah, Ziggy has taken that. Yeah, no casualties, right. So maybe that was intentional. But one thing is for sure, I think the U.S. suspected advances. They've been worried about the ballistic missile program in Iran for a long time, and I'm sure they haven't shown all their cards, but they demonstrated that they have this guidance system that, I think it will, Prabhash. Hello, Eric. Welcome to Face. Your first time here? You found the right place. You found the right place if you've come to Face. There's a good shot you could become an ace after a few years. Oh, you've been here quite some time? Yeah, I was asking Eric. Okay, so I don't have any advice. I'm going to keep powder dry. I had enough action last night for me. I know the team probably has some ideas of what to do here. I know it's only Wednesday, but I'm going to take a, kind of take a break. I'm old, so the stress affects me more than it used to when I was a young guy like Blake and Steve, and I'm the grandfather of ForexAnalytix, so Grandpa's going to probably wait for the NFP and react to that. I still have to say that until the end takes out 109, this is where I wanted to sell it, and I thought we were going there before missiles started flying. But, when you look at this on a daily basis, it's one heck of a candle. I can say this for sure on a lot of things. The lows that were established last night here, there's problems with the yen if we take that out. So I may, if it's, giving me some signs up here around 109, give it a shot into the NFP, or maybe lightly before it if it's in that area. And that's about all I'm thinking about right now. So I'm fried from, last night. And I did go out and sing Hurt by Johnny Cash. Anyone know that song, Hurt? I told everyone put their razor blades away, and my friends told me that people were, getting out the ropes. Yeah, Hurt, Johnny Cash. All right, so Blake, how'd you handle it, man? Were you at your workstation?
I was actually, it's funny. I think I put off getting a haircut for like a month and a half, which is for me is not normal. It's just, it's the holidays and we
Yeah,
had family visiting. I'm like, oh, I'll do it soon. I'll do it soon. I finally went to go get a haircut
and it
last
happened.
night during this whole shebang. So
Okay.
yeah, actually, what I
Well, you're
did.
watching it on the phone with your head moving when you had a
I was
razor.
I was actually I was actually sitting in the barber chair. I'm like, dude, you got to
Yeah.
hold on for a minute. I bought 1890 the dollar mex 1892, sold it at like 1896 and a half, and I scalped out of it, and and then I didn't trade it after that. But I was
Paid
like,
for the haircut.
oh yeah,
Yeah.
yeah,
You
that
could
was
have
good.
even had a pedicure or something.
Well, it was, but now, now I look at, I'm still long the euro. I'm not happy with it. I don't like the price action here. Let me
Go
talk
ahead,
about
buddy.
that for just a little bit.
Okay.
My average is like at 111.40, and it's not a huge position. I'm actually trading pretty light right now, just because I don't trust anything that's happening at the moment. But
Understandably.
I do own some euro, but I'm going to echo exactly what you had said because I 100% agree. One below 111, I don't want to be long anymore.
Yeah.
Let me show you the daily chart and kind of what I'm looking at here. So if you
Oh, wow.
take, yeah, see this the previous channel,
Yeah.
right?
It's cut.
We are
Yeah.
at the previous channel,
Okay. Like a back
basically the
test.
support. Yeah. We're in here. I if I'm want to be a little bit more granular because of the spike high up here. We're like testing it, probing it right now. So, and this is a very loose channel support. You could argue it's somewhere right where we're currently at. Oh, we have ADP coming in 5 minutes, so just stand by. Anyway, um, I'm just kind of sitting on it. I don't, like I said, I don't like it, but the ADP numbers are coming out here shortly. And I got to say, I don't think we should be expecting weak numbers. The jobs picture has been solid. Um, the market's looking for 160,000, a nice bounce back from last month, because last month was an undershoot, and then we had a big strong non-farm payroll. So I have to expect that we have a strong ADP today. And so that's the risk now with the euro, because with the strong ADP, it could be the catalyst that drives the euro below 111, is what I would think. And
I'm
then
trying to
it's not,
remember what Mark Chandler said, because he brought up the NFP because of his bias for the euro, uh, in favor of the euro. All the different pillars that supported the dollar have disappeared. I think he said he was looking for 130. So anyway, I'm not 100% sure. But do you think is that the kind of like the expectation 160? So anything
yeah,
underneath it might be a
that's
surprise.
via Bloomberg. That's the Bloomberg
Oh,
expectations right here is
okay.
160,000.
All right.
So that's I wouldn't expect a weak number today.
Okay.
So and that's the risk, and that's why I'm going to be watching the euro really closely here in a few minutes, because I'm gonna peel out of it if I have to. One of the other things last night, I want to talk a little bit about it. Last night, we were getting really stretched in this Aussie yen, and obviously, after I got the haircut, I was in the chat room, and I told everybody, look, this moves over. We were down here in the Aussie yen. I'm like, this moves over, and you got to expect when Europe comes in, level or heads are going to prevail. And then I had to step out because it was the evening and I'm dealing with my kids and my family. And then from what it seems like, we moved all of our U.S. troops out of the air bases. Iran attacked the air bases, no casualties. So if you ask me, that was probably more coordinated, so Iran doesn't look weak, and they get what they want, and
No
US gets
retaliation because no one's
no,
killed.
yeah, no one was
Yeah.
killed, and so in my opinion it looks like it was probably coordinated, but that's a good thing. That's a good thing
Yeah.
for risk, and obviously the stock market bounced back. We are going to be hearing from President Trump today, so where we go from here will be, I think, defining, I guess, what we're going to do from here. But it looks like the coast is clear, and for now, and anyway, and that's why it wasn't surprising to me to see gold come back down after gold it was rallying. The DSI's really over bullish, and we were way stretched, and gold had moved to almost 161% extension. We
Did
came
it get
really
there?
no, we came really
Oh,
close to
okay.
1620 or whatever.
Yeah.
And now we're coming down, and this it probably would make sense to me that we build some sort of base down here. If gold's really going to hold up, it'll hold it above 1550, because remember, the 1550 level is really the big breakout point. So I wouldn't be surprised for the next couple of days we come down a bit. But like I said, it's not surprising to me. Oh shoot, we have data coming out. Hold on, let me pull up the euro. Let me just bring this over. ADP looking for 160,000. Sorry, I just brought that over because it's very easy to do right now. Stand by. I would expect a decent number.
We should have like elevator music while we wait, right?
How much time we got?
Good morning.
Oh, 15 seconds. Whoops. Yeah, sorry. Hey, Stelios, good morning. Yeah, good number, 202,000. So that's not surprising to me at all. in the least bit. But this could be what takes the euro below 111. You know, it's possible. So we're testing lows right now, 111.11. ADP revised higher, 124,000, because it was way off. The previous number was way off. So dollar yen should be spiking up towards 109. You know, and if you got this morning's analysis from ForexAnalytix, you know, 109 seems possible. You know, looking for a move back up towards 109. So anyway, like I said, ADP numbers strong, not surprising. Euro dip, not quite to 111. You know what I'm actually surprised about this morning is the cable is below triangle support. And the cable looks like it's going to break down, but it's not breaking down yet. And I'm surprised about that. I'm surprised that the cable isn't, down here at like 130.50, which would be the 618 retracement. I'm surprised we haven't gotten there yet. So, there's been a lot of people leaning on the cable. The pound dropped 50 pips in like 5 minutes overnight. No one had any explanation for that. I read a bunch of guys that we follow as a firm, and everybody's like, yeah, who knows what the hell happened there. But it dropped pretty aggressively in like this, 50 pip move in like 5 minutes, and it's been bouncing around. And, I was expecting a little bit more follow through now that we're below this trend line, but we're just not getting it yet. So, we'll see. It's, we'll see how the cable reacts. I think we have to get all the way back above like 131.20 for it to take any of this downside pressure off. We have to, because then it would be like a false breakdown. But that's not happening yet. So yeah, stronger ADP. I don't think it didn't surprise me, and it shouldn't surprise anybody out there. So our jobs picture continues to be good. The euro is trading very heavy, and Amanda pointed out some of the data. I think it was the German factory orders. This is 6-year lows. No, that's not it. It was the French trade balance? Was that it? She had noted something. Maybe this is it. No, that's not it either. I don't know what it is, but the German factory orders, maybe it's a steepest decline in 6 years, something like that. I forget what she had said, but let's note that European data continues to be weak, and that's really the overarching risk for the euro. And I'm very well aware of that. And the euro acted last night how I expected it to happen. In a risk off environment, the euro was firm. The euro broke higher in risk off, but as the market came to its senses, the euro pulled back, and then we had weak data on top of that. So that this price action doesn't surprise me. I don't like it because I am long. Like I said, I'm long in the 40s, and I'm not really happy with it at this point. But it's holding up for now. We'll see how the dollar reacts from here. If you look at the dollar, this is very similar to the euro. The dollar is back testing the underside of the broken channel right now. Now it looks bullish right now. It's a daily candle, but it's still early in the day. So we still have a lot of time today where it could possibly pull a false breakout and come back down. So I'm not sold on dollar strength yet, but it's looking pretty firm. And like I said, I for one am not happy about it because I'm long a little bit. And thank goodness I was long the dollar MEX overnight and took that out. Now, speaking of the dollar MEX, one last thing I want to share with you guys before I bring Steve and Stelios on here. This is the dollar MEX, and this is the price action from last night. Spiked up during the risk off. Here we are breaking trend lows with the dollar Mexican peso. Now check this out. Here's your daily chart. Now okay. Here's your daily chart, and I'm going to get rid of this really quick. Is it this one? Yeah. Okay. So This is a lot of support down here. You can see it all, spike low through this 1875 level, right? If you look at like this range that we've been in for the last 2 weeks, okay, or I guess about 2 weeks, 127% extension of that range comes in at 1874. This right here is enough, in my opinion, to stop out anybody who's long the dollar max, just trying to get long down here. And then we're going to hit some pretty key support. So we might get a bounce from here. And here's the other caveat to this. If you guys did not see the DSI in the Mexican peso overnight, it is at 93. That is a very high reading for sentiment index. It's extreme bull sentiment index. So with the DSI so high, that means that, everybody's expecting it to move lower. As we hit this like horizontal, strong support from, way back in spring of 2019, it's 127% extension. We might actually get a bounce from here. So, I'm looking really close at how the dollar Mexican peso reacts down at the 1875 level personally. I think it's going to be pretty important pivot for this particular pair, right? Now, why is the cable going back up? This is one of those things that I was looking at it today. I'm like, why aren't we going down? I'm not necessarily bullish the cable right now. I was trying to trade it on the long side yesterday. I bought it at 131.16. I think I sold it at 131.15. I was trying to play it in here, and I said, nah, screw it. I don't want to be long. And then of course I got out, and then it goes higher. But I'm just looking at it right now, and I'm wondering, why isn't it going down? And that's rather interesting. Anyway, I'm going to see if Stelios and Steve have any comments. And good morning, Stelios. I heard you a little bit earlier.
No comments.
Good morning.
See you tomorrow. Bye-bye.
Hey, Steve, Steve, I got to ask you, how's how's the situation with your
The great
building
flood.
basement? Yeah.
Yeah, we've taken out the water, but we need to see how to fix this so it doesn't happen again.
Was Jason in a little tiny boat or raft floating around down there? Huh?
It's like you're dealing with the end of days over there in Athens. What's going on? Is this some sort of premonition? What's happening?
You think so? I have no idea. Perhaps Dale can be of help. He has all those friends with astrology, etc., so they can perhaps foresee the future for me.
Well, it's living in a building, and Athens. I've been to Greece for a couple of different times, and most people live in buildings, right?
In cities, yes.
In cities, and
I don't.
but you're okay. Let me ask you this, Stelios. Your house is freestanding, right?
Yes, sir.
Okay, so it's freestanding. It's really it's interesting that the architecture in, like, let's say Athens versus the urban sprawl that you get in the United States where I'm at, where not everybody's in a house, but you got a lot more homes, individual homes versus everybody living in a city. So in the case of Steve's situation, and I've seen Steve's place. He lives in a really, really nice building. But you got several tenants in a building, and it's like the basement's flooded. It's probably like a pipe or something, I would assume. Anyway, but I shouldn't sit here and speculate. And we're talking about FX. So, what do you guys make of the price action from last night?
Some interesting reversals are developing. So I think this can be a pivot. I mean, today can be a pivot. Can end up being an interesting pivot. Gold, silver, crude, USD yen, S&P. So I'm really curious to see how we're going to close the day. I think it's going to be quite important. Gold, silver are silver is already in the vicinity of a daily key reversal. Gold has a little bit more work to do for that, but we already have like a very nasty daily candlestick developing here as well. Crude oil, the same thing. I mean, crude oil has lost within like 40 hours. It has lost $4.
We almost hit the $66 level, which
Yeah.
by the way, the $66 was a really big big resistance. If you got the analysis overnight, we were looking at this, it's a downtrend line, but it's 127% extension of this move. We came within striking distance of that $66 level. But yeah, it's posting a key reversal. One of the things that developed from yesterday, which I think is very, very important, is we know now from the S&P and the price action in the S&P, the 4-hour chart hit this 38% retracement, and it also hit this really key uptrend line, and frankly I wasn't even looking at it last night. I was too busy looking at everything else because the S&P has just not been on my focus or on my radar as of late, because it's just bullish. But I didn't realize until I got up this morning that we pivoted right off of the trend line and that 38% retracement, which
we were talking about 3170. I mean, isn't that close enough for government work?
Well, I know I was talking about 3180 over the last couple of days, and I know I know I've mentioned it on the a few different places. But I didn't realize that we went and actually tested it last night because, like I said, I was too busy looking at other things as I was scurrying around with my family. But this is now really defines where the key support is for the S&P right now, and whether it's the trend line or whether it's this 38% retracement. I think while we're above 3190, there's no reason to be bearish. I mean, that's just it's pretty much solid support from here, right?
Very true. Very true.
I bet Steve took some in down there.
Steve was asleep. Actually, Steve, I don't know why Steve got up.
Steve thankfully wasn't asleep. It's quite funny actually. I woke up because I was very thirsty.
Oh yeah, I saw that on Skype.
Yeah, so I woke up because I was very thirsty.
Yeah.
So since I woke up, I grabbed my phone to check, what the market is doing, and suddenly I saw, S&P being, much lower, and so I, switched to Twitter because I was too tired to get out of bed. So I started checking what's happening, and then I saw that there was the attack. So then I told myself, oh, you actually have to, to wake up and go to the computer. So I came here, checked price action. I took 1/3 of my short off. Unfortunately, only 1/3.
Yeah, well, at least something. Yeah.
I didn't expect that big of a bounce. I expected that we might, recover, at a decent extent, but I didn't actually expect that we would end up starting the day probably higher than we closed the day yesterday. I contemplated with the idea of trying to short the spike in gold, and I didn't do so because, I didn't want to go against my, my macro thesis, although I thought that there is a decent chance that will be exhaustive, but I didn't have the guts to short it.
Hard to short something $40 higher.
Yeah.
Well, you know how I know? As I tried it. Okay, so
while you're explaining all this, Steve, and I'll let you take over the charts to do so. I just want to say that it was very exciting overnight. Be careful. Just be careful with like I said, be careful with like trying to play risk off while the S&P is holding above these levels, and I think you got to be really careful with the dollar here. The dollar looks strong. I'm short, and so I'm being very, very cautious. Fortunately, it's not a big position, but I just, today's a defining, am I going to stick around or am I not? Do I stay or do I go? That was cue for Dale to start singing.
I don't like that song.
All right, guys. Well,
that's a weak song. He's asking her.
Remember
permission.
and actually I'll probably have more answers for you. I'll probably have more answers for you by the time I see you on the midday or the
Yeah.
daily roundup webinar, which is at 12:30 Eastern, which is exactly 4 hours from now. So I'll see
I
you guys.
think everyone wants to see your haircut before you go.
Oh man, I don't have my camera plugged in.
Oh,
Looks
okay.
good.
Oh, what a chip and
Uh,
choose.
Short on the sides, a little longer on the top. Looks good.
all
All right.
right, buddy.
All right.
We
See you guys.
trust you.
All right.
Bye,
Have a
Blake.
great one.
You do.
Hey,
Hey,
guys.
Stel.
Hey.
Coach.
Okay. So my thoughts. we had a bit of a chat on the chat room this morning. First of all,
That's what it's for.
in the
It's
chat
functional.
room. First of all, we had German factory orders, just like Blake mentioned, came in negative, big miss. And actually, over the past 2 years, it's been coming in more times negative than positive. Just something to think about the German economy. And the euro is struggling, I think, also on the back of this number. And it's we've had some pretty miserable data actually out of Germany, especially the manufacturing sector. So that's certainly something to be aware of. Now, regarding the developments on the US-Iran front, like Blake again correctly said, the Iranians attacked an US airbase, which was already probably empty. There were no casualties. The only complication is this whole thing with this Ukrainian airplane, right? That was crashed, unfortunately killing, 170 people. Initially, the authorities said it was because of mechanical failure, but then weirdly they changed the announcement or whatever you call it, and they took that part out. So we don't know what happened. There have been some photos of damage from, well, we don't know what it is, but it looks like something hit it. I mean, I don't know, but this is something that complicates things a little bit. But the main thing for me is that we have had some kind of a reaction from the Iranian side. No casualties, nothing. So as far as I'm concerned, nothing has happened. And I think these markets, you can see equities back to positive now. And I have this feeling, I was talking about it in the chat room earlier. I think if nothing happens, if we have no new events or anything in the next couple of hours, I think the equities can really, really squeeze, because a lot of people have been taking Armageddon positions, right? They've been shorting stocks, buying gold, buying treasuries, and
Armageddon position being short stocks at 3,250, with valuations being like the most extreme they've been since the 99 bubble. Probably is not so much of of an Armageddon thesis.
I understand what you say, but given the recent trend and all that, it takes guts to be short indices right now. So I think.
Oh yeah, there's no question about it.
Yeah. I think we're probably going to see, if nothing happens today in terms of escalation, I think we're going to see stops on pretty much all of these or many of these. And I think there's a high chance that stocks might just keep going. And I did say, we might see, 1% day today. Anything can happen. So, or even more. 3,300 in the S&P. I don't know. Anything's possible when the markets, gets one-sided. But anyway. Let's see what happens. But overall, there hasn't been anything major since.
We already have a 2% day, by the way.
What?
From the lows to where we are, it's a little bit more than that, actually.
Yeah, but in the lack of escalation, risk assets are going to like this, and they're probably going to continue. So, and oil, you mentioned earlier very correctly, is just.
Oil looks really in danger of rolling over here. Same with gold and silver. I mean, they were bound, especially gold and silver. I mean, the move higher, especially in gold, had started becoming parabolic. So it's healthy to see some type of a correction lower.
Yeah, let momentum correct a little bit, positioning a little bit as well.
Yeah,
gold
oppositely from crude. Which, for crude, as I was saying, I'm not that convinced. I mean, the move higher in crude, all in all, didn't have impulsive characteristics, right? I mean, so I'm pretty positive that gold and silver are going to resume higher once we go through a period of correction or consolidation or whatever we get. But having to do with crude, I'm really not convinced about this move higher. So
well, the price action looks a lot like the other channel you have on the left, right? Well, a little bit like it, right? So it could consolidate sideways and go lower, maybe, yeah.
Yeah, so I'm a lot more negative crude than than I am gold and silver. Suffice it to say.
Steve, you're waiting for the. We have an eclipse on Friday. I'm not kidding you, man. Only it's not a solar; it's a lunar.
It's a lunar eclipse. Okay.
Okay. Anyway, I know you're starting to follow them, so I thought I'd remind you. Okay, that's all.
So is it a total eclipse of the heart or something?
Total eclipse of the heart. Yes.
Yeah. I hate that song too. Anyway, yeah.
Steve, have a look at Palladium afterwards. We have a question about it, but
Palladium has really gone parabolic again. There it is.
Wow.
It's approaching the 161.8% extension of the last corrective move lower we had. Today is so far the 11th consecutive up day.
It's rallying right into the lunar eclipse.
Yeah. I mean,
DSI is like 93, I think, or something like that.
Yeah, probably after today it's going to be something like 95, 96. So it's it's gone nuts. I think that today, especially if it ends up being such a big up day, because usually a long candle, a long white candle or a long black candle are an indication that you're going to have continuation in the direction of where you're going. There is the exception, though, that when you have big sequences of up or down days, very frequently you might see, a long candle following several days of, being already up or several days being down, might actually indicate exhaustion. So I'm interested to see if we actually close, with a long white candle being the 11th consecutive up day. I would actually consider it a likely scenario that this is going to be exhaustive. So perhaps Palladium is going to be like lagging by one day, golds and silvers reversal. So I might even consider making an attempt to short half of a position here or something like that. I was thinking of it earlier because I was checking the chart. I even drew this channel, which I didn't have previously, this red channel. I still haven't made a decision if I'm going to do it, but I'm considering it. So we'll see. We'll see how I feel about it by the end of the day. Watch for 2119. That's the 161.8% extension. As you see, we're not far away from that. I think that might actually reject price action. I mean, we are already extremely overbought once again. We moved from above 80 RSI down to 47, and in 11 days we managed to move back to almost 80. So price action here is like brutal. It is what it is, right? It is by far the most expensive metal now. I don't think we ever had a metal being, at 2100. So, that's the case. So that's what we have here. Stelio, anything else that we had besides Germany's data and all the action with the Iranian attack on the US base yesterday? Okay, he's probably off. Let me see. Yeah, okay. So what will happen to the Euro USD? That's a good question. And we are soon to find out. And the reason I'm saying that is, first of all, we're back testing as we speak this broken trend line resistance, in this case as support. Also, don't forget that 110.80 is an important support area and the previous low. So, you know, above 110.80, there is still a chance that the Euro USD can continue higher. But if we do break through 110.80, you know, it's not going to be a good indication, right? So it's not going to be a good signal for long positions. Momentum was anyhow lacking. I mean, we had something like a breakout here, but momentum never caught up. So, you know, I remain cautious. I want to see a squeeze higher in the Euro USD, and I do believe that it's going to happen, but, you know, there is no confirmation that it's going to happen now. The risk reward is in your favor if you want to be long, though, because as I said, 110.8 is not far away. And I think that that's the bull bear line in this case, right? And we're currently trading at 111.20. So we're talking about like what, let's say 50 pips, if you want to, you know, give a little bit of space as well, like 50 pips of a stop loss, looking for a move towards 113 if we actually hold here. So, you know, quite a decent risk reward, right? 3 to 1 or whatever. So I think we're going to find out quite soon. Pound, the cable is holding much better. And as I said the other day, I think it is very likely that the cable is actually building a triangle here. If that's the case, that's a bullish signal, right? Because the triangle should be resolved sooner rather than later to the upside. If this is a triangle, right? And, you know, it looks likely. Now, let me go back to silver and gold to finish up with those. So, you know, once again, we're going to fail to hold above this confluence of resistances at 1586, the 61.8, the long-term 61.8 and 127% extension. That's definitely not going to be a good signal. Plus, you can see that this candlestick, I mean, if we close at the lows or near the lows or whatever, is a, you know, is a very big warning sign, especially since we're talking about a about an asset that, you know, on the daily chart, RSI hit like 87 or whatever it did. So it's like extremely, extremely overbought. And, you know, if we close near the lows of the day, I think that this is going to be the beginning of, you know, a corrective move lower. Now, at the very least, I would expect us to retest this previous high at 1556. Probably we're going to go lower than that before we can continue higher. More or less the same situation with silver. Silver is, I'm carefully watching this channel actually. If we do close below this channel, first area of support is going to be 1770, and the next area of support is going to be 1725. I think any of these areas might do the trick, and we might see actually the 1725 is a confluence of supports. I mean, we have there the 50 daily moving average as well. It's a breakout area. It's a horizontal support resistance area. So I like that level. I mean, if we back test that level and price action looks okay, I'll probably be buying silver.
Hey, Steve, I'm just curious. You showed some interesting metal spreads before New Year's. I think one was palladium platinum. Was it
yeah,
one of
I was
them?
looking. I was looking at the spreads of gold, platinum, and palladium platinum. Yes.
Okay.
Yes.
So what happened? Let's see.
Nothing. I haven't done anything yet. You
No, I'm not
would
saying
know.
you did. I just was curious what happened with all that action last night.
So far, we don't have confirmation. I mean, I was monitoring this trend line resistance. It seems to be working so far once again. We seemed to be breaking down. We didn't. Now it's all about, are we actually going to hold this trend line as the resistance once again? If we do, we can actually continue lower from here. and having to do with platinum against palladium. There it is.
Yeah, that was
It
the
actually
extreme
broke to
one.
new highs. Yeah, it actually broke to new highs. So I was monitoring that trend line. We broke
Yeah.
below it, but it was only a 2-point trend line. So those
Yeah.
are not very reliable. I mean, you need to have like at least 3
Yeah.
points of reference to have higher conviction
It's diverging
about.
pretty good, bro.
Oh yeah, it is. It is diverging. It is if you see.
For a year.
Yeah, it is diverging since the beginning of 2019, but it is diverging even more if you look at price action since the middle of
Yeah.
October. So
Yeah.
it is diverging in 2 different time frames
Yeah.
in essence, and within the second one, you can view this as a 3 drive formation, right? You see
Yeah.
this
Yeah, I
this
do.
high here
Yeah.
with this high there, and this new high that we're posting now.
It's close.
Yeah, I
Could be
mean,
close. Yeah.
yeah. So
That's why
I
I
want
asked.
to I want to see if we're going to get sooner rejection from here. But I have to tell you that the general thesis of platinum overperforming in the year ahead, I still like it very, very much. I just want to see something more solid, in the spreads, and I'm
Technically.
gonna I'm
Yeah.
gonna let you know once
You're Mr. Confirmation.
once I actually take action. By the way, if you remember, we also something else I wanted to mention, because it is one of the movers of the last 3 days. Bitcoin did confirm the break higher here, right? So we have this breakout in Bitcoin, and I do consider this quite a bullish development. I think that it makes sense now being bullish against this, horizontal support area roughly at 7,400, and I think we can see another attack of, the 10,000 area. Ethereum has also broken out, but so far, Bitcoin is showing a much healthier momentum than Ethereum is. Regardless, both of them have broken out from the equivalent formation. So
That was a great
those,
call. You before that broke out, you called it. You showed
yeah,
it.
I was closely monitoring them, and they
Yeah.
were looking like they had bottomed. So, price action was looking quite constructive, and now that they've both broken out, I think that we might actually see continuation to the upside.
Yeah.
So, gold, silver, cryptocurrencies, crude, the big reversal that we had here in the S&P, the big reversal that we have in the USD yen. USD yen actually hit new lows, and it's about to, it's not about, we have plenty of hours, but there is a decent chance. I mean, it's already in territory that if we close here, this is a key reversal. So, many potential big reversals or even daily key reversals in the works. So as I said, today might prove to be quite a pivotal day in the markets. I think we should first wait to confirm that we close like this, and then I think there is a very decent chance that we're going to see continuation in the direction of these reversals in the days ahead. Same deal with the DXY. I mean, the DXY didn't put in a key reversal or anything. I mean, the DXY actually found a low several days ago. But there is even a chance that it's attempting to reverse higher. Now, I have it on the 4-hour chart. I don't have it on the daily, but we might as well draw it now. Depends on if you want to ignore the weeks or whatever. I would pay close attention to something like this, a trend line like that. So, if we break above that, and especially if we break above 97.70, 97.70, by the way, is a triple confluence of resistances as we speak. I think will indicate that the DXY is going to be moving higher once again. Now, by higher, I'm not expecting anything impulsive. I mean, there was nothing impulsive in this move higher either. But I do think that the DXY can start grinding higher if we take out 97.70. So having to do with the DXY, it's all about, 97.70 to the upside or 96.40 to the downside, right? So these are the levels I'm watching here. I had already marked on my chart some daily divergence here on the RSI. You can see it. I mean, it's quite clear. Momentum was not impressive to the downside, as to be fair, it wasn't impressive to the upside as well. So the DXY still seems somewhat stuck. I mean, so, you know, I'm not sure. We might need to spend more time in this type of trading environment having to do with dollar pairs. But anyhow, it's okay because, you know, we don't only have dollar pairs to trade. Now, another pair that I wanted to show that's not so popular, but it is interesting monitoring it. It's the Euro Swiss, because, you know, Euro Swiss is actually at, actually it's almost like 3-year lows, right? I mean, April 2017, it was the last time we were trading at these levels. And oppositely from the rest of the tickers that, you know, we just went over, Euro Swiss doesn't seem to really care about the reversal they had intraday. As you see, it is at the lows of the day. It hasn't recovered higher with the pickup in risk appetite since we found lows in the middle of the night. And that's quite interesting to me. Anyhow, we are now almost at this horizontal support area. Keep in mind that as long as the Euro Swiss is under pressure, you know, there are two things that I take from this chart. One is, you know, as always, what would you prefer, being short or long, Euro USD or USD Swiss, right? With the Swiss being well bid, obviously, you know, if you want to be short the dollar, being short the USD Swiss makes more sense than being long the Euro USD. So that's one thing to take from this. And the second one is that, you know, the fact that the Swiss remains so well bid is an indicator that things at the surface might be looking calm at the moment, but, you know, there are obviously underlying problems. Now, speaking of underlying problems, because we had this conversation the other day, if you remember, it was on Monday that some friends here were explaining that the Fed is going to be shrinking its balance sheet again because, you know, the repo market is not going to be under so much stress. Having said all that, we had 80 billion go in the market yesterday for repo operations, right? 80 billion overnight. So as I was saying, I'm very, very skeptical, and the situation doesn't seem to be getting any better. And, you know, this is something we have to keep in the back of our mind. Obviously, I'm not advocating to be short risk assets before we can actually see some confirmation. I mean, it's a risky position. I'm currently short, and, you know, thankfully I woke up in the middle of the night and I took some profits there. So, you know, now even if I get stopped out, it's going to be, you know, at no cost for me. But it's definitely, as Blake was showing, it's definitely a fact that, you know, we remain in an uptrend, right? We didn't break that ascending trend line support in the S&P, and since that is the risk barometer, you know, it is what it is. We have to respect the upside. Now, we also have questions about two other pairs from what I see. One of them is the Swiss NOK. Okay, Swiss NOK. Now, the reason I wouldn't be really looking to trade the Swiss NOK is the following. There you go. You can clearly see it here as well. Both of them have been, actually, that doesn't look that bad. I doubt it's going to be moving very fast, but this doesn't look that shabby. So probably the Swiss knock from a technical perspective is not a bad short. Looks decent, I would say, but irrespective, I mean, both the knock and the Swissy have been decently well bid recently. So I wouldn't be, looking to trade like a strong currency pair against a strong currency pair. I think, you'd better find another pair to trade. But if you really want to trade it, I would have to say that as long as we trade below this formation, we tested earlier some, this area of lows that we previously had. Doesn't look that bad of a short from a technical perspective, although probably you need to use somewhat more leverage than you would normally do, because this is definitely a slow mover. I mean, don't expect any big moves in this pair. Most likely than not, we're not going to see something like that. And another question about the Aussie Kiwi. Now, having to do with the Aussie Kiwi, as I said the other day, the Aussie Kiwi has broken down from this triangle. And it has broken down from this channel. It is quite oversold. There's no question about it. So, I'm not saying
Diverging too, bro.
Oh, it's diverging, and it's diverging quite obviously. I mean,
Draw a line off the 104 low and then the 103.5 low.
Yeah.
Maybe a shorter time frame, and it's like there. I know you're looking for lower, but
no, it's not necessary that it's going to go lower, because it's already diverging, as you said. And I mean, this move, which was a very big move for this type of a pair, this was a triangle. Perhaps that was a terminal formation. I mean,
that's right. One more thrust.
Yeah. So perhaps, we're going to satisfy that and then see some type of a big rebound.
Yeah.
To retest the broken channel before we can actually move lower. So
okay.
I think that it looks quite bearish, but I wouldn't be shorting it here. So, you want to short it, in my opinion, wait for a rebound to retest probably this broken channel, and then look to be short once again for a move towards parity. But as I said, don't try to short it like right here, right now. I think the risk reward is really bad. How about gold just made a multi-month high or close to, based on the monthly corrective move higher that's been in progress for many months now? How about gold just made a multi-month?
So I think what he's saying, Steve, is the high in 2011, okay, 1900 and
1920.
Then, okay, and now we bottomed at 1050. And I don't know, is this a fib from 900 to 1050 up here?
1586 was the 61.8 fib.
Okay.
We haven't managed to close above it yet. I mean, we tested the waters above it several times. Today was, the biggest example, because we actually made it to 1611, something like that. But so if you see, we haven't had a daily close above it.
Right. And then you have 1.618 at 16.25. Oh, okay. So if you put a monthly chart, that's what he's saying is, could this be a lower high, and that this was just correcting the 8-year decline or something? I think, am I interpreting it right, Rob?
I think that is what he means, and I think that Gregor was also looking for this move higher in gold to fail. But when we say fail, I don't mean correct lower, I mean fail.
Yeah, fail. Right.
Personally,
well, you have two drives there now. Okay,
yeah,
so we'll see.
Personally, I'm still bullish.
I mean,
not from current levels, right?
Right.
Obviously.
Yeah.
I mean, obviously, there's no question about it. But personally, I'm still bullish. I mean, from a technical perspective, from a fundamental perspective, you want to look at it as you like. No matter how I approach the gold market, I remain bullish. I wouldn't be buying it here, especially with the daily candle we see today. But would I be buying a decent pullback once again? Yeah, I would. I absolutely would. I mean, I still have my physical gold, and I'm going to be holding to it, until we reach, I don't know, 5,000.
He loves only gold. Steve Finger, he's the man with the golden touch.
Oh my God. Okay.
Can you tell it's interview time?
I can.
All right. Anyway, that's going to be your
who do we
hint
have?
from now.
Who do we have today?
Don Mead
Okay.
at 7 Sentinels, and yeah, I think it's going to be a great follow-up with what happened yesterday. And if you saw
Yeah.
Helene, she was showing all the sentiment measures, saying, yellow light, but not red yet. And then I was thinking last night, boy, it sure looks red to me, and now it came back. So, I mean, these,
Yeah.
it's kind of like all the different colors we have on our website.
Indeed.
The
Yellow,
traffic
green,
light.
red.
Yeah.
Indeed.
Yeah. All
Indeed.
right. We had it all in one night.
We had a question about USD ZAR. No need to say much about it. You can see the chart here. So getting rejected from the retest of this broken triangle. So, if you like it to the short side, this is the place you want to be short. Thanks, Dale. Enjoy the interview.
All right, buddy. Okay, Don, I'm going to make you a panelist. And I'm going to unmute you.
Mayor Dale.
Welcome back, Don.
Thank you very much. Happy New Year, and thank you for having me back.
Oh, well, Don, Happy New Year to you, and may waterfall declines be in your future in 2020 to, pay off your perseverance in the business. Us dinosaurs have to stick together. What do you think?
Absolutely.
All right. So,
and by the way, I want to congratulate you on that call back on December 26th.
Oh, the solar eclipse.
Yes. Obviously, gold, silver, oil, stocks, all sorts of currencies have proven you out on that one. Beautiful.
Yeah, we have another one coming up, Don. This time it's the moon, lunar eclipse, Friday or Saturday, I believe.
Oh.
So I'm really interested, and I think you have a great moniker and handle for what's happening. That there are military things happening on the globe, although there always are. But
may you live in interesting times.
Yeah, so we can get your screen if you just hover your mouse over the green box that says share. You click that.
Okay, and then I see it up there. Do I click on that?
You click on that, and then windows will come up, and then you select the window. You got it. Okay.
Is it? Are you saying
you are?
This is no half measures.
Got it. All right. So a nice screen, Don. I'm interested. The 7 Sentinels. Is that the Swiss Guard that protects the Pope?
I'm not sure.
Huh? You're not? Okay. Anyway, so I'm interested in what they're saying. We know that sentiment indicators. I don't know if you know Helene Miser, but she went over a whole bunch of things, put calls and things like that were flashing yellow. But I know you have your own proprietary type stuff. She was using like some McClellan stuff as well. So I'm interested in what your band is saying here, with especially in light of looked to me like a breakdown, and then it negated the breakdown yesterday. So take it away.
Pretty much the way I see it, Dale.
Okay.
By the way, you're looking at my website right now. It says 7sentinels.com. These are articles that anybody can click on, and this one right here that says no half measures. You see my mouse hovered over that?
Yes.
Okay. After this interview, anybody who wants to read the notes from this interview can click on there, because what I did was I laid out all of my talking points and charts and so on here. And so I'll just go right down the page here and begin to lay out what it is that I'm looking at. Okay. Whenever you're ready.
We're ready. You're on.
Okay.
It's showtime.
All right, good. For any that are listening, if you've been trading for a few years, you may have, the thought may have crossed your mind that if you could just have one monster trend, your life as a trader would be complete. Give me one rainmaker and I'll never ask for anything more. And indeed, there have been rainmakers like that in the past, for sure. 1987, 2000 to 2003, 2007 to 2009. But here's the problem, Dale. People don't recognize a rainmaker when they see it. You know, it's Jesus said that a prophet is not recognized in his own land. Well, so it is with a market top. The market top is not recognized in its own time. Somehow, when it's right there in front of us, we just don't see it. 1987.
Well, how about Don? I'm I'm an open book. So I have thought over the last few years several times that
Yes.
I saw it, and it turned out to be a mirage. So I mean, how do we know the difference between what we want to see, what we might be seeing, and having it manifest?
Well, that's just exactly what we're going to talk about today.
Okay.
Let's go back to 1987 as an example, though, of a situation that presented itself that few recognized. This is 1980's daily chart of the Dow Jones Industrial Average through 1986 and through 1987. And during that period, the market was moving up day after day, week after week. The investors' intelligence measures were at record levels. VIX, which was known as VXO in those days, was at an all-time low. So there was.
God, I didn't even know they had that as a measurement back then.
They did, and it was
interesting.
VXO. In fact, I've got a chart of it right here. See where it says VXO right here.
Yeah.
VXO was the version of VIX that existed in 1987, and what you're looking at here is the market up into the top on August 25, 1987,
Right.
and below it is the VXO. Now, an interesting thing happened in 1987 as we came into that August 25th top. You know, and I know that when the market goes up, VIX goes down, right?
Right.
Not so in 1987, as the Dow Jones Industrial Average came up and made successive new highs in August of 1987. Boom, 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 here to the August 25th high. Look what
the VIX was a tell.
It exploded upward ahead of any break in the market. In fact, it had moved up from 15 to 23. That's a 50% move.
Yeah. If my memory serves me, the high that you identified in August, we had a decline, and that was a top. We had a failing rally into October. Isn't that correct? And so you didn't have to recognize the top.
Yes.
You just have to recognize after the first break what an opportunity this is going to be if I get a failing rally to lay into.
Precisely.
Okay.
A very good point. But I would point out, too, that the VX was giving you a great big old heads up.
Yeah.
It was saying, look at me, get ready. We're going to have some really fun stuff ahead if you're a trader that will trade with the trend. And it did so by the exploding VXO. This was 1987, and you see the investors' intelligence bulls and bears. They reached their highest level ever at 65% in late 1986, and that showed bulls, and the professional investment services bulls were 4.9 times the bears. That was the highest ever. But look across here from 1986 to 2020.
I'm losing your volume a little bit, Don.
Pardon me?
I'm losing your volume just a little bit.
Okay. Does this help?
There, yeah, you move closer to it. Okay.
Okay, good. Notice what happens in this 25-year period. Here we are in early 2018, and we're right back to that record, all-time high of 66% bullish and 4.8 times as many bulls as bears. That's whole 25-year period. 87 and 2018 were the only times we ever got that.
Okay.
But in 1987, the focus attention was it was not on the downside. Everybody's gaze was looking in one direction only, and that was up. All projections at the time were for higher targets ahead, and the mantra at the time was buy the dip. As always, this golden opportunity was unrecognized in its own time. Here is what followed, and here is what you pointed out, Dale, the failing rally right here.
Yeah.
But ultimately, from that August 25th peak here is where the VIX exploded. Here is the peak in the Dow Jones Industrial Average, and this is what followed. Those of us that were there remember it well. I'm not sure if
I remember it.
the audience.
I went down to my bank.
Pardon me?
I had an office where in the lobby was my bank, so I went down to see if they were still open. They go, "What do you mean?"
Oh yeah, I would wonder if they were
They
even
didn't know.
realizing what had
They didn't know.
happened. But at any rate, that golden opportunity for investors, as everybody was buying the dip and ignoring this top and everything else, was sort of a case of reverse alchemy. They had turned gold into glue. One of the greatest traders of all time, you know that I talk a lot about Jesse Livermore. He faced a monster trend in the year 1929, but unlike the trading crowd at the time, he understood exactly what he indeed was seeing. Just to give this some perspective, Livermore started in the late 1800s, 1895, with literally $5. After the 1929-32 bear market, Livermore was worth more than $100 million, $1932, and adjusted for inflation, that's 1.2 billion with a B dollars today. His mantra, rather than buy the dip, was be right and sit tight. And he said, once I learned this, millions literally came easier than hundreds had before.
For me, being right is easier than sitting tight. How about you?
Well, absolutely right. And that is exactly what we focus on at Seven Sentinels, having the conviction, the discipline, and the continuing trend measures at work to give
You'd have to tie me up in a chair, Don. Don, you'd have to tie me up in a chair to get me to sit tight, okay? I'd have to be restrained, but all right, go ahead.
Yeah, well, at any rate, we try very hard to keep people focused on.
It's the toughest, and I say that, it's one thing to make a good call, but if you don't trade it, that's, so what? It's another thing to make a good trade, but the most difficult thing is to make a good hold, to have a good hold.
And that's why Livermore had said many times that of course, he used a sexist term. He said men that, and he should have said men and women who can both be right and sit tight are very, very rare. And,
Yeah.
and as you know, and I know, the sitting tight is the hardest part of the whole thing.
Yeah.
But let's talk about sentiment in 2017, 2020. First of all, let me explain that I see the whole 2017, 2020 period as one big, magnificent top. It started back in 2017, and it continued through 2020. If you look at, for example, the transportation averages, they made their high during that period and are lower. The same is true of the Russell 2000. The same is true of Dr. Copper, and all sorts of things actually have come down since the peaks that they made during the 2017 to 2020 period. I see that as one big top. But let's go through some of the sentiment readings that occurred in 2020, so you'll see why I believe the top of 2017 to 2020 is going to be, even though it's recognized by very few as a top right now, it's going to be looked at.
Losing your volume again, Don.
Pardon me?
Are you using a microphone?
Yes, I am.
Okay, so you have to. I know. I've done that a million times. I walk.
Okay.
There, that's better. Yes.
Let me get right up on the microphone here.
Okay, you're good now.
Okay, good. The 2017 to 2020 period, I believe, is going to be looked back at by students of the market as the quintessential top, the big one. Let's just go through some of the sentiment measures, and they're right here on the screen. You can see them for yourself and read them. But in the Investors Intelligence Bullish Percentage top 65, only twice ever, the beginning of 87 and at the beginning of 2018. The all-time peak was in 2018. The Investors Intelligence Bull to Bear ratio topped 4.8. Only twice ever, at the beginning of 1987 and the beginning of 2018. The all-time peak was in 2018. The highest number of Hindenburg omens ever, and I'm not going to go into an explanation of that. We don't have time, but the highest number of Hindenburg omens ever occurred in 2017. The highest level on the CBOE skew index, again, we don't have the time to go into the mechanics of that, but the skew index hit its highest level ever in 2017. VIX registered its lowest number ever in November of 2017. It hit an intraday level of, I think, 8.56.
Okay.
Is our volume okay still?
Yeah, it's good. Yeah, I was just guessing. I thought it was 9 or around
It
9,
was
yeah.
around 9. I think the highest close was right around 9.
Okay.
But at intraday, at one point hit 8.56 in November of 2017. That was the lowest ever in history. The NAAIM exposure level, that's the, oh boy, I can't even think what the acronym stands for, but it's the mutual fund commitment levels well, anyway, the mutual fund commitment levels for hedge funds hit its highest level in history in 2017. They were over 100% long as a whole, all of them put together. And that's the first and only time they've ever crossed over plus 100%. And since the dawn of the previous century, there has never been a period as long as in 2017 without so much as a 3% pullback. So there's just some of the...
Didn't we have a 3% pullback at the end of, in December last year?
2018, but I'm talking 2017.
Oh, okay. Oh,
right at the end of 2017, we had, well, actually, over the course of 2017, we had like something like 300 days without a 3% pullback.
All right.
So those are just some of the indications of why I look at 2017, 2020 as being the quintessential top. This stretched over 2.5 years. Now, up above, when I showed the 1987 example, I do want to make it clear I'm not predicting a crash. 1987 ended with a crash. I'm not looking for that. I'm looking for the same general pattern in the market, and that is that when you have extremes in sentiment, in this case the highest ever, when you have momentum falling all through the advance, when you have our 7 sentinels going to sell as they are right now, we have all the earmarks of the top, and I believe that it may have, and I'm going to be a little cautious here, it may have begun. We may have seen the final top last week. If not, we're so close to it.
You could taste it?
Yes,
Okay.
I certainly can.
Okay. All right.
So that's really the things that I wanted to go over today. I believe that this market is not a measure, not a market that calls for half measures. I think this is a market that calls for the full measure of professional market trading.
And by that, you mean position trading?
Yes, yes.
Okay, and what does position trading mean to you? Is there a time frame to what separates a swing from a position?
Well, what we do at 7 Sentinels is we use 3 different time frames: the daily, the 2-hour, and the 10-minute Sentinels.
Okay. All right.
When the daily and the 2-hour Sentinels are aligned, we move up towards 100%, either long or short, depending on obviously whether they're aligned in uptrend or downtrend. And then as the shorter term measures begin to pop in the other direction, then we pull back our position.
Okay. Okay, so you will be trading, even though you have a long-term bias, your sentinels, if we're not going to have a crash and it's going to be a grinding decline, there's going to be a lot of times where things are going to flip for you. So
Yes.
Can you ignore those sentinels and just sit with your position like Jesse would tell you to do?
Yes, but I wouldn't be fully leveraged doing that. I think it's just too nerve rattling.
So because instead of a rainmaker, could be a pain maker.
Yes, very, very well said.
Okay.
Very well said.
All right. So you want to show your website?
Yeah. Again, here is the 7 Sentinels website. If you go to 7sentinels.com, you don't have to be a member to read these articles. You can click on them. The notes of today's conversation aren't no half measures. Here are articles like Rainmaker and When Worlds Collide that talk about the precise numbers that we went over very quickly today for sentiment as they peaked out in 2017 and 2018. And if you go to limited time trial, click on that. Right now, I've set it up for anybody who wants a 7-day trial can click on there, and for $7, they could have a 7-day trial and just see what's there. We publish every day during the market hours, and then every night with an article about where we are in the market and what all of our indicators are saying, and then every weekend a weekly report. And then all of our signals are there and all of our trades are there. So we invite anybody to do that would like to. But in the meantime, any of these articles are yours to read if you just click on them. So we hope you will.
Thank you so much, Don, for coming in and showing us some market history and comparisons to where we are today. And I hope that blessings just chase you down and take you over like a tsunami, and you have that rainmaker happen for you and your people. And I'm always rooting for you.
Well, thank you so much,
And
Dale. And
my-
and I can't tell you how much I appreciate what you do here. You're my favorite follow on Twitter.
wow.
Literally.
Okay. Thank you so much, Don. My
okay.
trading warrior brother, Don Mead, guys, follow him on Twitter. Check out his readings. And Don, when we get back together, 3 months down the line, see how things are playing out into the spring.
Excellent. Excellent. In the meantime, good trading to you, Dale, and to anybody
buddy.
else that's tuned in here.
Thank you, Don.
Thank you.
Adios. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. Adios. We'll see you tomorrow. Go into members chat. I'm sure Blake is trading his head off. So I'll see you later on. See you guys tomorrow. Adios. Thanks, Don.
Thanks again, Dale.